And welcome to the investment review for November 2014, in which we'll be taking a look back over recent events covering the last couple of months since our last review. To bring things up to date about our reviews, avid readers or indeed listeners may have noticed that we've had a short break from them. You may ask why. Well, the nature of our planning is long-term and not to gainsay markets, but instead put together a well-constructed investment approach that meets our clients' needs in respect of investment risk. By combining the right risk inside the right product for our clients, we aim to build solutions that serve the medium to long term. Naturally, we watch world events and economic affairs very carefully, but as we have often said, we won't be drawn into knee-jerk reactions when world affairs demonstrate their short-term derailings. Feedback from data that we can see has shown us that a reducing number of reads was taking place, and so we are now looking to issue these reviews less frequently. Individual client portfolio and planning reviews will of course take place with the usual frequency, and of course our clients are welcome to contact us anytime if there are any issues of personal concern to them. On pensions, because the government have granted a level of never before seen access to pensions and very recent changes to death benefits for people who are in retirement using their pension fund for drawdown make this area of planning increasingly complex. The changes are effective from April 2015 and it can impact what decisions you may wish to make about your pension in the now and after the changes take effect. We cannot stress enough how this has changed the face and the complexity of financial advice, and so if any clients are contemplating how this may affect them both now and in the future, then we would urge that you ask to meet with an advisor to talk you through the changes. Whilst this does present new opportunities, it also poses new issues. The government seek to benefit by the tax that will be due on what is expected to be an exodus of funds from pensions. Many observers think that the new rules are too generous. It would not be the first time that a government have hastily introduced rules and backpedaled later when the consequences became clear. So we recommend a great deal of thought about pension funds and thus a discussion with your advisor. This area, the new face of financial advice. We mentioned in some of our earlier investment reviews the retail distribution review, in which a sea change took place in the remuneration within the financial services industry, not just whether or not we get commission. But what came along with this was a huge and largely unreported change in the way that product providers service their client investments. As your IFA, we are noting a dramatic drop-off in their service levels, which means that we have to pursue them for their newfound inadequacies. Also, they are now moving their offerings onto a relatively new phenomenon called a platform. This is supposed to serve as a one-stop shop for investment planning and wraps up a client's product's needs, your ISA, pension, unit trust or bond, all onto one unified system. In theory, this is absolutely brilliant news. Access to thousands of investment funds and investment solutions. In practice, we are seeing different levels of strength in this market, and thus we're reviewing very carefully which of these providers offers our clients the best ultimate system. What is true is that the providers of old will very soon fall way behind. It's our intended aim and desire to make sure that our clients benefit from the pluses that we are seeing develop in the market, and as the fog clears, we'll be in touch so as to recommend where funds should be invested. This does not necessarily mean a change in the investment strategy, just a change in how it is managed and administrated, and we aim to ensure that this is beneficial to each individual client before any recommendations are made. Now market news since our last review. World events conspired to see a pretty significant drop in markets, almost 10% in most cases. This was caused by a mix of issues. First of all, Syria. Uncertainty surrounding the stability of the Middle East and the spectre of war always shocks markets. In Europe, a determined stance from Germany not to increase QE displeased markets. Mix this with news that the European economy, excluding the UK, could fall back into recession, and these two negatives served to pull the market backward. The Ebola concerns were very disturbing for markets, and whilst the numbers were being extrapolated as to the potential of this disease, the market shuddered. And in the USA, changes in legislation to how companies can domicile for corporation tax hit pharmaceutical companies. These make up a pretty big part by value of markets, and it did not reflect positively on their share prices. With regard to our investment portfolios, on the next slide there's a graph showing the performance of our mid-risk rated portfolio. I've compared this to the FTSE 100 only because the FTSE 100 is a popularly referred to and well-known barometer. It's not necessarily a direct comparison, but I've looked at this over the last 3 months so that we can see how a well-balanced researched portfolio compares to the broader markets, which of course hold only equities. Over the period under review here, you can see the blue line, our mid-risk portfolio, has performed smoothly and positively, returning just north of 2%, which is a consequence of the balance of asset allocation, geographical mix, and a spread of risk. The FTSE 100, the red line meanwhile, has fallen by almost 2% in the same period, and this shows why we should have a diverse range of investments. Sometimes asset allocation and a broad risk of investments takes a while to bed in and to demonstrate to us in normal markets why it is the right way for us to invest. We think that this is now beginning to show through, and so for the time being we're not changing our stance on the principal methodologies that we are using. And so that the investment reviews do not seem overly repetitive, as I mentioned at the beginning, we're going to be changing the frequency with which we issue these. In all probability, therefore, this will be the last of this year, and so here are our opening hours over Christmas. We'll close at the end of the day on the 23rd of December, and we will reopen on the 5th of January 2015, with another whole year behind us. In the interim period, of course, we'll monitor our email and our phone messages so that any urgent matters that could arise can be dealt with. To bring the investment review to a summary, we see 2015 as a year where there will be a great deal of change in how investments are administered, this being resultant of both changes in legislation and the earlier mentioned changes in how product providers are looking to service their client needs. Of course, we need to make sure that we enjoy the up-to-date modernity, but we'll look at this entire exercise with caution before we make any recommendations. The fundamental rationale for investing, whether by ISA, pension, bond or unit trust, etc., remains the same. The only way to look for growth over and above inflation is within an investment regime that is balanced for appropriate risk. This means our vigilance and our regular contact. Please at any time do call us if matters concern you. We can assure you we do always review matters, and where changes become appropriate, naturally we will advise. Areas we have under watch for 2015 include interest rates in the broader sense, as these may, but only may, go up. This can impact some of the savings funds that we are using, such as bonds. We are also keenly watching markets as they move forward, not without the odd flinch, but nevertheless forward. This brings this review and this year of reviews to a close. Our contact details follow on the final slide as is usual, and in closing I'd like to take this opportunity to thank all of our clients for another year of continued support and to wish you and your families the very best for the Christmas season and a healthy and prosperous 2015. Thank you.